A very good morning, team. It's Fabio, and welcome back to EURUSD, which has continued to push in towards the upside. Yesterday, a very strong daily bullish candle close. Obviously, the dollar has been bearish, but for a good fundamental reason, because today we have FOMC, where Jerome Powell, the head of the Federal Reserve Bank of the United States, which is pretty much the central bank of the United States, is going to be talking about interest rates. Is he going to cut interest rates, which is bearish for the dollar and bullish for crypto and equities? Or is he going to, let's say, give us a more hawkish tone where he's not necessarily going to be talking about future rate cuts, and where he's going to be mentioning that interest rates in the near future or maybe next year will go up? Now, the market is pricing in these rate cuts, and hence why we've seen EURUSD buy in towards the upside with a lot of dollar weakness. Now, the overall bias of yesterday played out perfectly, where we saw us push further in towards the upside and take out this blue dotted line, which is obviously the overall break of structure line. Now, this now means here that the impulsive phase on EURUSD is over. The phase of buying has now, let's say, passed, if I can say it that way. So what I tend to do, and I discussed this very extensively on the live session of yesterday, so if you didn't check that out yet, make sure to do so. We want to be focusing on being in buys within the overall impulsive phase. Now, a good example is over here, massive impulsive phase in towards the upside. Then we have this in between, which is the pullback phase. So you want to wait that the pullback phase is over. And when is the pullback phase over? Well, most likely when you, for example, take out a bump in the road, which acts as liquidity, or when we retrace in towards where? Well, in towards the 0.5 Fibonacci retracement level, as we perfectly did. Now, where is EURUSD currently trading? It's currently trading in a dead zone. Like I say, like I call this the amber zone, the orange zone. This is the zone where at any point in time we can expect that the market is potentially going to start pulling back. So you don't really want to be looking for any buys after a break of structure, only once price pretty much retraces back in towards the green zone, and for example back down in towards this sell before the buy over here, this orange zone. And then within that orange zone, you can see that we have the free monthly level and, for example, the monthly open and the weekly open. So these are strong areas of support, and that is then preferably where I would be looking for a long, as we're then also back underneath the overall bump in the road pretty much. And then what we could do, or we're back inside, the overall impulsive zone. And then preferably what we would do is form kind of like then one more impulse, and then that bottom that is then created, that then becomes a future bump in the road that we can take out as liquidity to then, for example, look for longs again, as we, for example, had over here, where as well we took out liquidity over here, we retraced back down into the sell for the buy, and then we headed up higher. So I'm just simply looking for something similar here on EURUSD to play out. Now, let's keep an eye on what FOMC does later today. I wouldn't be any euro dollar positions. I would definitely sit this one out for now and wait to see what is going to be said for EURUSD. But you guys know where I would potentially be looking for buys. For sells, yes, you can look for an overall pullback trade in the anticipation that the market is going to pull back, but obviously that is always going to be the riskier trade because you're doing what? You're fighting against the overall momentum, which is definitely towards the highs. Now, this here is your overall swing structure with the swing low, the swing high. Now, and we're then trading at a premium because we're trading above the 0.5 fib, we're trading above the overall break of structure line, so you ultimately expect a deeper retracement to occur today. But again, it's a news day and anything can happen at any point in time, and I'm just waiting to trade with the overall trend, and the overall trend is clearly in towards the upside, so I'll be waiting for those longs if they come to us. Now, going into the dollar index has sold off perfectly exactly as we anticipated pretty much throughout the entirety of this week and towards the end of last week. So really happy to see that we got that overall sell-off that we were looking for. I think yesterday was a beautiful example of how impulsive price was and continued to be in towards our targets. Now, looking here at the dollar, again, just highlighting how you could have read this. Very, very simple. Once this break of structure here took place last week, it was to me very clear that the market wanted to head down lower. So then what I do is I simply look, okay, this is the overall impulse down. I then mark out my overall liquidity highs, liquidity high over here, liquidity high over here. And we wait for the liquidity highs to get taken out. And then once liquidity gets taken, we identify our entry pattern in the form of a market structure shift in towards the downside, confirming that we then have a supply zone. And that then aligns perfectly with taking out liquidity and with the monthly open, tap into the monthly open, tap into supply, and then we sell off in towards the lows, towards our overall liquidity targets. So very clean price action from the dollar. We're now stalling at the 3-month level. this could be a level to watch out, guys. This could cause an overall pullback in towards the upside, definitely back up at least in towards this buy before the sell orange supply zone, from where then one more push in towards the downside, for example, could take place in towards the final end boss overall swing low. Or if we then continue pushing up today with news, then we could start looking at maybe trading back up towards this liquidity high, or even this upper liquidity high, which is an NFP high back from August 1st. Okay, so that's what I'm kind of looking for. Currently in no man's land. Yes, you could take a short-term pullback as we're at the 3-monthly open, so keep an eye on the lower time frame order flow. Though I must say this is not the highest probability, as the fractal structure also remains bearish. So you would have preferably seen another sell-off and then, for example, fractal break, and then you could have looked for a long on the double fractal break. But for now, for me, the dollar is kind of like something to not touch. It's currently in, again, no man's land. What do I mean with no man's land? It's after the fractal break of structure. It's after the swing break of structure. So we can see a pullback, but again, the momentum is in towards the downside. So you want to wait for it to come into the area of interest for that further downside, if that makes sense. So we need to wait for prices to come here, and then we can look for potential shorts. Or if then the market does not give any confirmation, wait for the high break, and then we look to further long it. So that's the dollar index. Going into GBPUSD, we can see that we continued up higher throughout the week, as we've been anticipating. Nothing much, to be honest, on the further downside side of things. We can clearly see that the overall momentum and the overall market structure and the overall, especially fractal structure, remain bullish ever since tapping into this monthly open level that we have over here. So for me, it's just crystal clear. What do we need to wait for? We need to wait for liquidity to get grabbed, preferably above this overall X, so this blue dotted line, this bigger one, and then, for example, reject the 3-month level, and then we could look for one final short position upon giving us some confirmation. Also, you can keep an eye on what the 4-hour does. So if the 4-hour does break the current fractal low, then you could also look for a short position, maybe on like the double fractal break, and then there is going to be a much bigger short to potentially take in towards the lows that we will then be monitoring. Okay, so I'm going to monitor some shorts. Preferably we would move up a little bit higher towards the blue dotted line, as then the higher probability shorts would come into play. But if momentum does start kicking in, we will keep an eye to capitalize on those GU shorts. Then we have AUDUSD. AUDUSD has continued in towards the highs and has reached my overall liquidity high, which I was mentioning all week, and last week I just said it's a long, and as we can see, it has been a long. So congratulations if you took any longs on AU. Obviously not the most beautiful pair, but yeah, I mean, the overall order flow does or was or maintained itself perfectly. We can clearly see here that the sell before the buy here remained in control. Then once again, the sell before the buy here remained in control. Then once again, the overall sell before the buy here remained in control. And now we currently have this pretty much as your area of sell before the buy. So as long as this orange zone holds, I wouldn't go short yet. You could be a little bit more aggressive by looking at this 4-hour fractal low break and then saying, I want to go short here. But with so much bullish momentum, for me, that is a little bit too enthusiastic. So I'll be definitely waiting for a little bit more momentum before getting into any short positions. But it is at a nice overall swing high over here. So yeah, a pullback could definitely take place, as we've had a break of structure, for example, here in towards the highs. After break of structure and a liquidity touch, we expect an overall pullback to take place. So let's see if we can get that overall pullback to actually then take place. Going into NZDUSD. This one has been also relatively slow. What I want to highlight on this is that the daily fractal is very nice, in the sense that this here is a sell before the buy that is currently in control. If that orange zone were to break, then I would be looking for potential short positioning towards the downside again, because of the fact that we've had a break of structure down here. This high over here I identify as liquidity. And then this would be the swing high, this would be the swing low. So all we need is this, and then we have the bearish confirmation to look for a sell. So keep an eye on that daily order flow break, and that would also mean that the 4-hour market structure would shift from what is now currently an internal uptrend into then the internal downtrend. So let's see if we can break that. This is what you would now want to see, and that would be in line with the overall 4-hour swing as well, as the 4-hour swing is again from this overall high in towards this overall low. We draw in the premium versus discount tool. we see that we're trading at a premium price, and you could look for shorts. Again, we've taken out a bump in the road over here. But now for the shorts to play out and for this, let's say, squeezing pattern in towards the highs, because that is pretty much what you're having here, a nice 1, 2, 3 squeezing pattern with the one high, the second high, the third high. You now want to see this mature and you want it to break out, and that would be the short that I would be willing to get in. But we need to see the confirmation first, because maybe with FOMC we'll just head up higher. So let's monitor this for potential shorts. Might be ready either tomorrow or on Friday. And then we have, of course, the dollar pairs being dollar Swiss, dollar yen, dollar CAD. I think I don't need to explain too much. Dollar Swiss has played out so beautifully. Congratulations. I know a lot of you were in this position. Yeah, I mean, I've broken it down so many times. It is one of the clearest positions that there is, guys, where we had a beautiful break of structure in towards the downside. And from that point onwards, you're just looking for a short. Again, on the internal structure as well, break of structure down, swing high, swing low. And then ever since, the market structure pretty much here internally remained bearish. There were a lot of shorting opportunities, with the most beautiful one being from this buy before the sell over here on the daily. And then inside of there, if you look at the 4-hour time frame, obviously here we had the break of structure down, we had this little liquidity high get taken out, we tapped the monthly open level, and then we got the 4-hour change of character literally after tapping that monthly open level, with even a perfect retest of the supply zone. So many shorts to take, and congratulations if you did. Obviously now it's at a massive swing low down over here, so you could expect a potential pullback to come into play, but it's again in no man's land. So now you want to see reaccumulation happen before then, for example, looking for continuation down. But this will also depend on what the FOMC statements are this evening and what is being, or what is going to be said by Jerome Powell. Going into dollar CAD. Dollar CAD, the move this week has also played out as we've wanted. Obviously, we're now kind of like at the lower bound of the range, where you definitely want to take some profits off the table. This will also be dependent on Canada news, because today we have the Bank of Canada speaking on interest rates as well. So depending on what the speech is like, are they going to be dovish, then we can see a CAD sell-off. Are they going to be hawkish, then we could see a CAD push up, meaning further downside for USD CAD. But we're now at the monthly open level, always a good level to take some profits off the table. And I'll personally not be looking to trade this at the moment, as the overall move has played out. Preferably, I would want to see one more sell-off in towards this blue dotted line, and then from there I could look for a bounce back in towards the upside. Dollar yen has played beautifully as well. If we look at where this has gone, guys, you can see here that I marked out the overall swing low of our range, and it's taken out that low of the range perfectly. And ever since, it's been giving us around a 45 pip push in towards the upside. Obviously, the overall range that we're currently dealing with is this range over here. So always use the range trading tool. If you don't know what settings to use, you can copy them here. And as we can see, overall, we've continued to push all the way in towards that overall swing low. So from here, we could now see a potential bounce back in towards the highs. So let's monitor this. I would say let's see what the statements are from the Federal Reserve and how we react to this area of supply plus monthly open, because this could potentially just, again, give us another downside push and for us to finally break out of the range. It's going to be very dependent on what is being said today, on what the next direction will be for dollar yen. But if we do see, let's say, more bullish dollar, then I would be looking for longs once the fractal breaks to take out all of these descending highs that we have over here. So that's a potential position that I'm looking at. So either short from this supply zone, or we go long after the break of that supply zone and the retest of the monthly open to take out those descending highs. And then that will also depend on what the Japanese yen basket will do. But as we can see, we've been finding support and been consolidating here at the yearly open. But this is also waiting probably for what is going to be said during FOMC. And then last of all, we have, of course, gold. Gold has been selling off, which is perfectly normal because of the fact that we've built up, again, internal liquidity. So we've now taken out the internal liquidity over here, and we're retracing in towards, let's say, the lower range that we have over here. So from there, we can potentially look for new longs if we get some confirmation in the form of a market structure shift when we get into those lower levels. Because for now, obviously, the overall order flow remains bearish, which we have over here. This could lead to an overall deeper retracement. and then just keep an eye open for what happens within these lower areas of demand. Do we form any form of support to then look for potential buying opportunities once again? So that's it for today, guys. Thank you so much for tuning in. I'm going to be doing a Discord live today as well. So make sure to join the Discord server, and just wish you all a fantastic trading day, and make sure to leave a like, subscribe to the channel, and also leave a comment and share this video with friends who also trade, and just spread love and happiness, guys. Love you all. Thanks.